This is a pretty big week ahead of us, and this was a pretty decent start, though it kind of was a line that had to hold the sort of Alamo of technical lines on the S&P 500, the long-term trend that we just went straight down to with weekend and overnight selling. But the fact that we got bid into the close, I mean, it still keeps things interesting. A lot of yellow lights here because it is a pretty tough spot that we're in as an investor. There just hasn't been a lot of clear breakout in really any of the charts. Now, you could argue that we did get that in stocks with the selling earlier this morning. If you look at the chart of the NASDAQ or say the MAG 7 ETF, you did make lower lows, which is obviously very discouraging. But it brings up the point this week that I want to make, which is basket. Two different things in the market here. Break it apart, bracket it apart. You got one thing, which is tariffs. You got the other thing, which is big tech selling. I remain pretty optimistic here that when it comes to the tariff stuff and this big event that we've got this week, it's probably still easier to bet against volatility actually than on it at this point with the pop and vol that we got and the fact that we've now had several weeks for some things to normalize. But that's only point one. The other half of the basket is tech, and that is anyone's guess. Who knows? That's just price action. That's just the whims of the investing world, and you can't figure out how the herd is going to go. However, the charts there are very concerning, but I do find a little bit of respite in some of the tariff stuff. So that's why we're at the yellow light right now, because on the one hand, you never know when tech is going to find a bid or if it's just going to fall apart. That's what happened again this morning. And the irony here is that despite all the things you've heard on a narrative basis about tariffs, about policy, about recession, the market has continued to sell tech over and over again, which still makes it very much a pure tech thing. So that being said, for the chart, the MAGs did break down, but they're trying to desperately kind of hold on to the general range. The NASDAQ made the lower low, but the S&P 500 did not. So I'll put the red light on when the S&P 500 makes a lower low. But because you had the breadth and the outperformance of other stuff today, including banks, which looked pretty good, that's why you've got yellow. Now, that being said, let's go to the tariff stuff, because for tech, your guess is as good as mine. Nobody knows when the next guy is going to stop selling. That's why you watch the chart. So obviously you need to firm that up. But if tech can hold, I'm feeling optimistic still on the tariff stuff. Here's why. Number one, the 10-year yield. Granted, this move higher in yields last week is what got me optimistic for stocks, and that was obviously a big head fake. Yields came back down, and equities got hit. But the yield is still holding at 4.2. And I do put weight into bonds, which have generally been making higher lows on the yield. Now, this is a pretty flimsy chart, I admit. And if yields do break down further from here, if this line gets violated, then the green light's going to go on to bonds, and that's not going to be good. I did say last week that be aware, even though I'm optimistic on stocks, you have to see yields in the dollar firming. And what became clear last Friday early on was that investors were scooping up bonds, piling into treasuries, and selling the dollar, and we got a big risk-off day. But I'm starting to think most of that looks priced in still because of the chart on the 10-year, which has those higher lows, and then also the dollar as well. I'm liking the dollar action. A lot of stability in the dollar, right at the line that I've held for a long time, which is around that 103.7. So the dollar holding there too, I think, tells us that the tariff stuff has basically been fully priced in. Keep in mind, we got to VIX 30 basically on the tariff stuff, and it didn't move higher. The only time it really moves higher is if you've got massive kind of black swan shock. What could be a big shock here? Who hasn't modeled all the different tariff outcomes? Guess what? Everyone on Wall Street has. And you know what their solution and their observation has been? Nothing. Nobody knows. And it probably nets out to something somewhat even generally, in which it just tips the scale where everyone kind of shifts down, but the U.S. maybe gains a tiny little bit of an edge because it's just a bigger tax on everyone else, and we're the ones that run the economy. So it's kind of stepping on everyone at the same time. That might elevate us a little bit, might not, but at the end of the day, that shouldn't be a black swan style thing. And we've been trying to figure it out for weeks, since November, since the election. The dollar made a full round trip. Yields are holding in. I hope that means stocks can hang in too, but that'll really depend on tech, and that's anyone's guess. But as far as tariffs go, I think it's still easier to bet against tariff volatility than some new explosion of it.